Welcome to my channel, Balance Sheets Matter. Today we're going to be looking at Southwest Airlines, ticker LUV, and do a stock analysis on Southwest Airlines. But before we start, make sure to subscribe to my channel, Balance Sheets Matter. I do individual stock analysis videos. I'm trying to come out with them daily. So if you want lots of stock analysis, you should subscribe to my channel. If you also want me to analyze a stock, you can leave it in the comments below, and I'll try to get to that stock if I can. So let's basically start off the analysis on Southwest Airlines. A lot of people get very interested in airline companies because a lot of the times they trade at very low PE ratios. Well, Southwest Airlines right now has a 32.7 PE. Their forward PE is only 8.34. So that's looking potentially like it could be very cheap. So we have to determine if this is a value trap or it's not. And also you can see even on this little guru focus band, it's potentially showing that we could be extremely undervalued. So I'm going to do a little bit of a comparative analysis, because if we look at basically the market share between the different airline companies, we have American Airlines, Delta Airlines, Southwest Airlines, and United Airlines, all with pretty equal market share right now. So let's basically dive into the analysis. So we're going to bring up the financials here, and you can see, well, the revenue growth is a little bit choppy for Southwest. The long-term trend has been going up, although their 10-year growth rate has only been 1.8%. So that's a little bit concerning. Also, when we look at basically the return on invested capital over weighted average cost of capital, you can see that basically the return on invested capital is usually not too much higher than the weighted average cost of capital. Sometimes it's even lower than that. So that's a little concerning if Southwest Airlines needs to grow by taking out debt or issuing new shares. Luckily for Southwest Airlines, as I'll get into later, they actually have a pretty good balance sheet, so that's not very likely. But this is something to keep in mind in the future, that relatively high weighted cost of capital, and when they are getting a return on invested capital, it's typically not that impressive. Some years it is, some years it isn't. So basically see the revenue trend. They ticked up. They kind of slowly ticked up along the way here, and there was the big dip during 2020, which we all know why, but they've got to new highs in revenue of 25 million. But if we look at the gross margin, you can kind of see these gross margins are all over the place. Between 2010 and basically 2013, we were trading around 20, and then after 2014, from 2015 going for a few years there, was trading closer to 30, and now we're back down to 18. So the one thing to understand is that a lot of times the airlines are very linked to the price of oil, and that can affect basically their top or bottom line. These companies do hedge for it a little bit, but you can even see in Southwest case, during the time that they were having those lower margins around here, the cost of oil was more expensive. And then after 2014, when it dropped, their net margins went up. So just something to keep in mind with the airlines, that if oil price stays high there, it could be not a good thing for Southwest Airlines. And then we can see again, this is kind of reflected in their operating margins a little bit all over basically the place. And if we look at basically their total operating expenses here, it's not too out of line. They're kind of increasing at the rate you would expect with the revenue. So I'm not seeing really any big increased efficiencies, because things are all up and down all the time, but it's not too bad. An important thing to look at is also basically their net interest expense. And Southwest Airlines, it does have one of the better balance sheets. So you can see their interest expense has typically been pretty low, and they do have some excess cash, so they are making interest income. And this might actually be from some, if they're doing some hedging on the oils or not. It's hard to exactly say. I don't really need to look that deep. I just know that basically they're in pretty good shape for paying their net interest income. Even if they do have any positive numbers with the operating income they have, it should be pretty easy for them to pay. So that's a good thing. And you can see over time, the net margin's been increasing over time, although we have pulled back a little bit. And that's kind of makes you concerned about the cyclicality of basically the airline industries. 2013, we were making $1 of EPS per share, and now we're back down to $1 of EPS per share. But unlike a lot of other airlines, Southwest Airlines has been doing very good basically at buying back the shares. A lot of other airlines, they're actually increasing their shares as time goes on, but Southwest Airlines has been slowly buying them back, not a completely rapid rate, but at least they're returning some capital to basically shareholders. So let's look at the balance sheet. We can see right now in the total current assets, they just have over $14 billion, 14.6 billion in current assets. And a lot of this is in cash and basically marketable securities, which is basically where their interest income is arising. And then in comparison, they have about 11.7 billion in current liabilities. So this is a pretty good current ratio. Southwest Airlines is in a good financial spot, and their total assets are $36.5 billion. But you have to remember what this is. It's a lot of this is going to be, gross plant, property, and equipment, and other basically tangible assets, which is mainly their planes. They have a little bit of goodwill. We don't really need to concern ourselves with that because it's so low. And then in the total liabilities, they only have just over 25 billion in total liabilities, and just under $8 billion in long-term debt. So overall, I actually do think Southwest Airlines does have a pretty strong balance sheet. They're in a lot better spot than a lot of the other airline companies. So if shit were to hit the fan basically and have a bad time for the airline companies, they're going to be able to survive it much better than the other airlines, since they're probably not going to have to heavily dilute or ruin their balance sheet, since they do have some excess cash there. So that is a plus for basically Southwest Airlines. So let's get down to the cash flow here. And there's something very important to look on the cash flow. I actually need to adjust this chart, I think, to 30 years, because it's very tricky when you get to the cash flow. A lot of people get very deceived by basically the very high cash flow Southwest Airlines has. So basically, if we look at Southwest Airlines right now, and you can see they have pretty good cash flow across the board. Cash flow from operations has been really strong. But what I want you to notice here is we need to look at two different lines. The cash flow from depreciation. So this is when they're amortizing basically their planes and their other assets they have, versus the purchase of plant, property, and equipment, which is basically when they're reinvesting in planes or other physical stuff. So you can see right now they are depreciating way more than they're currently buying in. But the thing to understand with these plane companies is this is a fairly cyclical trend. If we actually go back in time here, this is why I had to go bring up the 30-year chart. You can basically see back here, they were in more of a heavy spending spree. You see 1.2 billion, 1.7 billion, 1.1 billion, 1.4 billion, 1.3 billion of purchase of plant, property, and equipment, most likely planes. And then, but the cash flow from depreciation is only 300, 384, 400, that's much lower. So they had to go through a big CapEx spend here where they're not actually expensing it very much. And then as time goes on, you can see after this big, basically CapEx spend, which ended about in 2012, basically they're still depreciating all this old stuff they've bought. So the cash flow from depreciation is adding a lot of cash flow to their bottom line, but they haven't been spending very much lately other than these 2 years. So the one big kind of fear for Southwest Airlines is they might have to go through another big CapEx spend in several years, which will severely hurt their cash flow. So, and also it means that additional few $1 billion on the balance sheet could potentially go away very quickly. So I'm going to show this in comparison to other airlines so you see what I mean. But let's just quickly look at the other aspects basically of their balance sheet. So you can see nice basically repurchase of stock. They did issue a little bit of stock here, but they're buying back at almost the same rate. It wasn't too big of a deal. Not going to always say they were purchasing back at the best time. Again, if we actually look at the stock chart here, when they're purchasing most was from 2015 to 2019, and 2015 to 2019 is when the stock price was quite high. And this is kind of, I guess, one issue is when you have more of these cyclical companies that do share buybacks, is when they are doing their share buybacks, they're typically buying the stock back high in comparison to when we were in 2009 to say like 2011, where they almost did no share buybacks, and that's when the stock price is very low. So the problem is when the company's having problems, they aren't buying back stock and the stock price gets very low. But when they do have that excess cash flow, they're buying back the stock when it's relatively high. So that's just one issue. I think it would be better if they actually just paid that money off in a dividend, because when you're that cyclical, repurchase of stock doesn't make as much sense. But you can see they've been paying a little dividend and they've started paying it back. So let's just jump into some of the other airlines, and I'm just going to show you kind of a little bit relative in comparison. And the reason why I generally do think if I were to buy an airline, which I actually don't want to, I would probably want, Southwest, because you look at something like American Airlines here and you can see their net interest expense is very, very expensive. This is a big weight on the company. And then I'll just restore this tab here quickly. Okay. Let's go to the 30-year chart. And that didn't take too long. And then we get to their American Airlines. Yeah, we're still on there. Then we get to their balance sheet. The issue is they only have $67 billion in current assets, but they have $71 billion in in total liabilities, or total assets versus total liabilities. So they're actually sitting at negative stockholder equity here. So that's not a very nice place for your balance sheet. But the real point is, what I want to show you is the cyclical spend basically on the airline. So again, you can see the cash flow from depreciation slowly ticks up over the years, generally because they're depreciating old stuff they bought before. And then here's their spend. In this recent time, they actually haven't had that much, but between say 2018 back to 2009, they had very high CapEx. You can see, look at this, 3.7 billion, 5.9 billion, 5.7 billion, 6.1 billion, 5.3 billion. And before that, there was this much lower period relative of CapEx spend for a few years, where it's only 680, a billion, 680, 530, 740, compared to all these years when each year they're depreciating about 1.2 billion. And you basically start seeing this pattern in all the different airlines here. So let's pop up Delta, for example. I don't think I need to look at UAL. I think you're getting the picture. It's all kind of the same. It's just, well, let's quickly pop down to the cash flow. And where are we here? The cash flow from depreciation. Yeah, you can see about 1.2 there. And then here's the same cyclical thing. You have these really high spends for a period of years. It lowers for a little bit. It jumps back up, can stay high for a while. And fortunately, Delta's actually been staying. This was actually, you could consider a little bit of a lower period. And then they've recently got into a much higher period. So potentially, this could mean that Delta, since they've been spending so much on CapEx right now, it is possible to decrease the CapEx in the future. Either way, the whole point is it's just something to watch out on Southwest Airlines there, since they've had a very long period of low CapEx spending on their planes. So let's go into the interactive chart to kind of get an idea of a relative valuation. So I'm just going to basically pop up the price to sales, because their net margins are so all over the place. It's really hard to get basically an accurate view for something like, Southwest Airlines or any airlines. Like typically when airlines do finally actually trade well, they do trade in quite low PE ratios. So the thing is, there's a lot of variance in this chart. I'm just going to get rid of the price here so we can see this a little bit clearer. But you can see during this period, the price to sales ratio, we're trading as high as maybe 1.7, as low as 1.1, and we're at about 0.72 right now. But then when things weren't going well for them and there was overall headwinds, they were trading as low as 0.4. So that kind of really puts Southwest Airlines right in the middle of these two ranges. Like we could, go up 50%, increase basically double, or not up 50%, but double, or we could decrease by 50%. So that's kind of interesting, because then when we look at kind of the stock chart and where the stock price is in this channel, it's looking very kind of middle of the chart, right in these moving edges. We see like we could have some upside, we could have some downside. So I don't really think Southwest is the best value now with these companies that obviously have headwinds. Airlines, Warren Buffett, he briefly got into the airlines, then he got out of them. It's never a very good business to get into. I feel if you are going to get into them, you want to get into them when they're in a lot of distress, basically. And I don't think that time is right now. I think the stock chart also speaks a lot too of investor sentiment, because basically since 2021 here, they've just been in a constant downtrend. So even though in the last year, basically since I think about last October, the market has been in an overall bull market. Southwest Airlines has not been participating in that bull market. So investors aren't very optimistic about the outlook for it, and I agree with that. And I think sometimes the stock said, like the stock chart says 1,000 words. You just look at this pattern rolling over. I would probably want to wait till Southwest Airlines potentially gets as low as 15. This is where a price volume profile is. This would also be a 50% cut in price, and then this would kind of be meeting my criteria, buying Southwest Airlines at a historically cheap price. So I would be very interested in Southwest Airlines when it gets to about more of a zero point 0.4 price to sales ratio. And this is usually how I like to look at stocks for buying them on a really big discount. So I really wouldn't consider this a big discount. It might get a big discount in the future. And Southwest Airlines, compared to other airlines, is the airline I would be looking at because of their incredibly strong balance sheet. Although we do need to keep an eye on their CapEx if that's going to weaken the balance sheet in the future. Although even if that happens, relatively to all the others, they're in a much better position. So I hope you like this stock analysis. I hope it gave you some insights into Southwest Airlines. Remember to subscribe to my channel and like the video, and I'll see you in the next stock analysis.